We are looking at the South Dixie Industrial Submarket, which extends all the way from Florida City to Brickell along the US 1 corridor, where we currently have 633 properties, industrial properties that is, 12 that are actively for sale on the market, 4 that have sold in the last 3 months, 32 that are actively for lease, and 16 that have been leased out again in the last 3 months. As far as the lease rate, we are at $21.96 a square foot, and that number is expected to hold for a little bit and then eventually catch up. The blue line is where the actual asking rents are. I guess it's adjusting to where the market is. The expectation is that it's going to stay kind of flat for a little bit. It looks like that flatness is going to extend into the third quarter. So at some point it's going to start going up around again, those rates, I guess, as soon as they lease out all those vacancies that they currently have between this submarket and the other submarkets. As far as the time to lease, it's somewhere between 5 to 6 months. On average, that's the trend line. We went from that to the trend line versus the other one. As far as the dollar per square foot, we are $276 a square foot, and that is up almost 6% from last year. We are seeing some activity there. And again, this one is similar, where the first opportunity is if you are coming out of a long-term lease or you're looking to get into that first space, you might want to consider purchasing now, because again, the expectation is that those prices are going to hold for a little bit longer, somewhere into the third quarter. So you've got that opportunity to get in there. As far as pricing by star rating, and the star rating from CoStar is 1 to 5, 1 and 2 being on the low end, the 3 in the middle, and 4 and 5 being the high side. The 1 and 2 tend to be the older stuff that's smaller bay, and those get usually the higher price per square foot, which is why they're up there the way that they are. So that would be again, I know that investors really love those. As far as the cap rate, we're at 6%, and it's been holding flat for a while. The expectation is that that one is going to begin to go down as soon as those prices start to go up. The bulk of that is anywhere from 4 to 8%, the bulk of it being in the 6 and 7 range, as you can see. So there's still some good trades that were being had out there. As far as the trend line for the star rating and the pricing, again, those high prices on those smaller bays probably push the numbers a little bit down in terms of investment, because they command a higher price by the owner user. However, investors really do love those small bays because they do rent out very quickly. The other opportunity that I see here is, out of the 37 properties that sold in that market last year, only 15 were actually listed. And we know that according to the National Association of Realtor, prices that sell for sale by owner tend to sell 20 to 30% less than market value. And I've seen that myself with some people that I've come across, unfortunately, after they've sold the property. So we know that it is happening, and this would be the second opportunity. If you are thinking about selling, reach out to us. Let us give you a market analysis and show you what's the best way to get your property sold, potentially for the fastest and for the highest price.